Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's start with results first. Non-banking financial company M&M Financial posted a decent first quarter earnings on the back of strong growth in disbursement. Ramesh Iyer, MD of the company, spoke to Shraddha Babla on the axle load, rural housing demand and much more. Let's listen into the entire conversation.
We are not yet a very significant player when it comes to CV is concerned, and I think it's important to understand that any new regulatory change that comes in gets handled by the OEM, because ultimately it's the volume that they are very keen and particular about. We are only an enabler. So we don't think that the new regulatory change that has come about is going to have any major impact. They would settle down in the next couple of months and things should look normal.
All right, so you're sticking with your 22% guidance for FY19.
So I think in the first quarter, if we have registered a decent growth of disbursement upward of 35%, and normally for us the third and fourth quarter are really the volume months when after the harvest, the festival, the wedding, all of these seasonal thing, tourism, everything picks up and the volumes do pick up. I think one thing I would like to add is definitely our deeper penetration with the fourth quarter 100-odd branches that we added is giving us the benefit. Being a player present in all segments of vehicles is the other benefit that we clearly get. And as we look at it, I think in the next couple of quarters, one would also see maybe some price increase will come in for all vehicles. And that was to happen for the same volume, the disbursement values could be different. So without putting a number out there, we believe if the first quarter is done well for us, the year should look pretty positive.
All right. So for Mahindra Rural Housing Finance, the loan book in this quarter has grown, but the bottom line performance hasn't, and the gross NPAs in this segment have also risen considerably. Do you believe that this number could worsen further before we can start seeing an improvement? Just want your thoughts on the outlook for the housing finance subsidiary.
I think clearly disbursement, of course, as you said, is growing well. The potential is very, very high. I think the asset quality that you see deterioration is largely caused by one state where, because of a large cooperative bank representation after demonetization, things had gone slow and the consumers had resorted to possibly using the EMI that they were supposed to pay us for their requirement, like buying of seeds, fertilizers, etc. And you would see correction of this much faster than ever before, and we would believe in the next couple of quarters you would actually start seeing correction rather than deterioration. And important to understand, even at this level of provisioning, the profits have doubled over first quarter of previous year, while on an Ind AS basis, of course, they have remained flat, and you would see that get corrected as you see recovery from the NPA happening.
All right, so fair to assume that you're still targeting a 7% gross NPA number by the end of March 19?
So for the financial services, that is Mahindra Finance particularly, you see, if you were to look at it on an Indian GAAP basis, the NPAs have almost remained at March level, maybe just 0.6% increase or 0.7% increase over March. Normally, you would see in the first quarter, anytime in the past, if you've seen the gross NPA jumps by more than 2 to 3%. If that's been well arrested, I think we have every reason to believe that we are clearly on the correction path and the worst is over for us from an NPA perspective.